Well, we're running into market opening, but let's quickly get in Ashish Chaturmurtha, Director Head Research at JM Financial Services, who joins in. Hi, Ashish. Morning. What are your derivative strategies you have for us?
Good morning, Nigel. So I think, banking is one sector which is looking quite promising and showing a very strong relative outperformance. We have seen PSU banks doing extremely well. Now, I think a lot of private sector banks are also showing very strong strength. Within that, HDFC Bank is showing a very strong trajectory. So I think stock, after consolidating for a while, is continuously seeing a buildup of long positions. And I think here one can initiate a long, keeping 1615 as a trading stop loss. We are expecting stock to see somewhere around 1720, 1730 in our immediate short term. In the NBFC space, Cholamandalam Finance is one stock which is forming a very strong base. So at current levels, one can initiate a long, keep 730 as a trading stop loss. On upside, 800 would be my short-term target in Cholamandalam Finance. In the capital goods space, L&T is continuously hitting fresh all-time highs, and there, we are witnessing continuous long, build-up as well as a strong delivery volume picking up in the stock. So L&T is a buy with a stop around 2130. On upside, one can expect L&T to test somewhere around 2250 to 2300 trajectory. And last but not the least is ITC, which is forming a very, very strong base after seeing some correction in the last couple of weeks. So now I think 330 to 344 is where the stock has consolidated for a while. Now I think stock is poised for a fresh rally. Keeping 338 as a trading stop loss, one can initiate a long. On upside, 360, 365 would be a short-term target in ITC.
Interesting names. Ashish, just stay with us. I'm just coming back to you. The rupee, by the way, has opened as well, which we'll refer to. But this is the market laser segment where we try and identify, a stock, a sector, or, a trend which may be useful to you just to keep on the radar. And I've got two names which I want to kind of highlight today. One is Kotak, the other is United Breweries, and I'll do this with the help of charts. These are daily charts which will come up. This is now Kotak Mahindra Bank on your screen. And this is a simple trend line. As I said, this is daily chart for Kotak. What you can see is the upward sloping trend line, which starts from the low in June. 30th of June is where this starts. It's got a touch point on the 30th of September, which is the second touch point. And then yesterday, Kotak Bank basically closed exactly at that trend line. So it kind of, typically, as you can see, you do see a bit of a bounce. But in any case, this becomes a pivotal point. The level is 1865, 1865 for Kotak Bank. I just want to make 2 points on Kotak. One, of course, is the fact that Kotak is hugely underperformed other banks. The Bank Nifty is up 20%, ICICI Bank is up 22% this year, Kotak is up 3%. The second point is that for some time now, there has been this buzz in the market that perhaps there will be a large block deal sale, which I think, may happen, may not happen. But I think that has kind of kept markets worried about doing something very large with Kotak. And that's perhaps one reason incrementally why Kotak has underperformed what other banks have done. But I think it's now sitting at an important juncture, a bounce or break, and I thought makes sense to highlight Kotak. The next is, I think, more clearer in that sense. United Breweries is the next stock I'm referring to. Now, what you have basically is, again, a daily chart for United Breweries. And here, the first touch point, the first stop was 9th of November 2021. And you can see what the stock did. It hit that level of about 1785 and then middled around for bulk of this year, did nothing. And now, a little over a year later, UB yesterday hit that level once again. That is the 1785 mark. Actually, yesterday's price action, we've circled that for you, is interesting because we went through that level, hit almost 1800, and there was a bit of an exhaustion which happened and the price finally closed under the 1785 level. We closed at 1777. I would say with United Breweries, wait for a final kind of confirmation. If the market looks very good and it kind of takes this out, it opens up room upsides. If not, you're basically looking at an exhausted double top failure, which I think gives and sets it up nicely for a trade on the other side as well. So just two things, Kotak and United Breweries, which I think you might want to keep on your radar, which I wanted to present today. Ashish, of course, is still with us. Ashish, Any thoughts, these two names, Kotak and UB?
Prashant, so I think very well explained, and I think I'll go as my preference trade towards UBL, United Breweries Limited. And as you rightly mentioned, it's almost a 13-month consolidation which UBL has completed. But if you also observe the trading volume activity in the last couple of trading sessions, this is significantly higher than what we witnessed in November 2021. So clearly, a lot of long accumulation is taking place at current levels. And the way, other indicators, stochastics, and, the averages are indicating, it clearly gives me a sense that this is clearly poised for a very strong, decisive breakout. On upside, I'm expecting stock to hit somewhere around 2000, 2050 in an immediate short term. I think 1730 should be the trading stop loss for going long into UBL, but I think the probable setup of UBL looks quite promising. As far as Kotak is concerned, the only thing is that, the broad trajectory of banking is quite positive, and this stock has significantly underperformed peers. Only thing is that there's a good support area, but we need to see that the stock is consistently trading below 20, 50, and even 100-day moving average even at current levels. So I think what we need is a serious reversal, and for that, stock need to cross 1900 levels on closing basis. Till then, I think it's a wait and watch approach which need to be adopted in Kotak Mahindra Bank. But once the stock crosses 1900, then I think some good short covering can start happening into Kotak Mahindra Bank.
All right, thanks a lot for that. Well, let's get to the pre-opening session now. A couple of stocks in focus. Paytm will be in focus as the buyback is due today, or at least the board meeting is today. Abhishek is here to give us the fine print. Abhishek, over to you.
Well, Sonia, Paytm will hold a board meet today to consider a potential buyback. Now, the company may not use the IPO proceeds for the same, given the fact that I'll just explain the maths in detail. As per SEBI formula, in terms of open offer or tender offer, the maximum that they can do is about 2,035 crores and about 3,310 crores respectively. So the fresh issue in IPO was around 8,300 crores. The cash and cash equivalent in the balance sheet is about 9,182 crores. So 69% of the IPO proceeds remain with the company, which is about 5,600 crores. So if you deduct that from the cash and cash equivalent balance, the net cash balance that they have is about 3,582 crores. Hence, they may not have to use the IPO proceeds for this buyback. Downside risk, we have Macquarie on Paytm. They have an underweight rating with a target price of 450 per share. They remain concerned over the intense competition and tighter regulation. They are also awaiting closure on the IT audit that was done earlier, and they are concerned about the longer term take rates and sustainability over there. Back to you.
Okay, thanks a lot for that. Well, Samir Bhise, who tracks this stock very closely and, of course, who tracks the sector, joins in now. Samir, your thoughts? What are you expecting from the buyback this time around?
Yeah, hi. Good morning. I think it's a good way, probably after the kind of price performance we have seen over the last 1 year. We upgraded Paytm a week back or so. Our view fundamentally has been that valuations were not supporting all through last year. However, as we stand today, Paytm has kind of corrected significantly. Their execution, if you ask, has surprised most people, especially on the distribution piece. As it scales up over the next 6 to 8 quarters, we think it makes for a favorable risk reward on the name. Longer term questions, and as we had highlighted in our report last year also, that take rates could probably normalize at lower levels than what they are seeing currently. But I think the momentum right now is quite strong. The operating jaws with respect to costs are narrowing, and which should see EBITDA margin improvement, and that should drive stock price. They have also kind of borne the brunt of what's happened with global fintech names, but some sort of semblance of stability with respect to even what's happening on the global side, I think makes a case for possible trade over the next 3 to 6 quarters on Paytm. Specifically with respect to buyback, I think it's a good signal that probably the incremental cash burn may not be at the same rate as was the case, say, 12 to 15 months. So that should give some comfort, though we will wait for exact quantums. I believe the number could be anywhere between 20 to 30 billion. I am not sure what amount the board will decide today. Though we think it's a good signaling mechanism to existing shareholders. Fundamentally, our view remains that over the next 3 to 6 quarters, you should see continued momentum on distribution. Medium term, we will closely watch how take rates evolve on the distribution side.
Sameer, there's no chance that the buyback promoters participate, right? I mean, they can't be so out of touch. I mean,
No. I would rule that out, frankly.
Okay, we're just coming back to you, Sameer, in a bit. We'll take a quick break here. We have to. There's 5 minutes to market opening. I think we'll come back with... Okay, let's just take our calls, 9-10 calls as well. And Sudarshan and Mitesh are with us. Sudarshan, what do you have?
Buy the Nifty, buy Coal India with a stop under 228.
Okay, and Mitesh, how about you?
I'll go with the buy on Nestle with a stop below 22.75 for targets of around 20,950.
Okay, just a couple of more stocks that I want to mention in pre-opening. Tata Motors is up almost about 1.5% after the stake sale in the subsidiary Tata Tech. So that's the big Nifty gainer right now. In the broader markets, KEC International, it's on the back of an order win, the stock is up almost 6.5%. And BGR Energy is the one. They've also received an order worth 330 crores. So that stock is also looking pretty good. But you had a question for Sameer?
No, I think that's interesting points that Sameer made, Sonia, earlier.
Yeah.
Now, Sameer, PSU Banks is another space you track, right? And, for many of these banks, we are... Now, price, of course, is not... SBI is at the new highs, but others are not. Very far away from price-wise earlier highs. But if you look at price to book, 1 year forward multiples, most of them are back at peak levels, which were made many years ago. Your thoughts, Sameer, from here, and which ones look the best placed?
So we've backed some of the larger PSUs, especially SBI, Bob, Canara, over the last 12 months. I think on the smaller name, there is more of a catch-up going on, especially given that it's more system-driven or external environment is such that the key concerns which market has had on these names for last, say, decade or so, there is no stress creation, in fact, of meaningful order, which is why everyone is benefiting. But as a franchise, we would still prefer to be with the larger ones. SBI continues to be our preferred play. Even there, I think at some point in time, we will have, say, maybe there is around a 10 to 15% upside on our fair value for SBI. But what one needs to realize is that the stock performance is more driven by how the environment is, given that these banks do not have baggage of stressed assets. Margins have been favorable, likely to be favorable in third quarter also. What is critical is how origination is shaping up, and that will be clear over the next 12 to 15 months, and how the deposit franchise shapes up. There has been significant under ownership of these names, which has also led to this rally. I think 2023, generally, we would want to see banks which deliver strong on deposits, quality of deposits, that will be the outperformers, is our view.
Okay, all right. Sameer, final question before we let you go. On Paytm, you said you'll upgraded the stock, I think, in the recent past. What's the target price you have out there?
We have a target price of close to 600, as far as I recollect.
Okay, Sameer, thanks a lot for joining in. Well, the pre-opening rates, a couple of rates, we're just waiting for them to settle. Looks like the market is going to open with a minor positive tick, up almost about 27 odd points. It's all the Tata Group stocks that are doing well. Tata Motors, Tata Steel, Tech Mahindra. There's, of course, news flow there. The Bajaj twins are also looking good, Bajaj Auto and Bajaj Finserv. But Dalmia Bharat is definitely the one in focus post the deal yesterday. What are brokerages saying, Nigel?
Well, in terms of Dalmia Bharat, most of them are positive, actually, with the details that they have. CLSA, they have an outperformed rating. They've increased the target price to around 2,100. They say the deal can address two aspects for them. One is the geographical concentration risk. Earlier, they were only in North as well as South. Now, that gets sorted out. And that journey towards that 110 million ton capacity, well, that's well and truly on. By 2027, remember, they have been talking about 75 million tons. Morgan Stanley, they have an overweight as well. Target price at around 1,900 rupees, which in fact, it's already crossed. They say this will help them diversify their geographical footprint, and it also makes them a pan-India player. Though almost all brokerages, they're still waiting for clarity. What is the timelines for this for closing this out? How do they fund this? And what are the potential synergies? That's a question mark as of now. Jefferies, they have a target price of around 2060. They written an elaborate report just around 10 days or so ago when the company, in fact, was on a roadshow. They say if the acquisition fructifies, it will enable the company to make a good entry into central region. So for the time being, the stock opens with a gain of around 1%. There are question marks whether the deal gets sorted out. So let's see whether or not it can hold on to that.
Okay, well, just keep an eye out on Kotak Mahindra Bank as well. The company holds 10% stake in KFin Tech IPO, and that's likely towards the end of December. So that's another stock that will be in focus. But just 5 seconds more left for the market to open for the day. Looks like it's going to be a decent opening, actually, about 30 points higher. That's the first tick on the index. The mid-cap index is up over 100 points, looking much better than the frontliners. It's flat with a bit of a positive bias for the frontliners, and the Sensex holding above 62,200. What's leading from the front is Tata Motors, up about 1.5% on the stake sale in its subsidiary Tata Tech. Tata Steel is up almost about 0.7% as well, and Tech Mahindra is up 0.5%. The other notable gainers are Asian Paints, Bajaj Auto, Bajaj Finserv and Indices Bank, all up anywhere between 0.5 to 1%. On the downside, Bharti Airtel, Sun Pharma, TCS and Eicher Motors are your top Nifty losers right now. Infosys as well is dragging its feet a bit, but largely IT, you'd have to say, is sulking. And ICICI Bank is something that is just about in the red line. Nothing alarming, but these are the list of losers at the moment. A lot of banks in the broader markets are hitting fresh 52-week highs. Yes Bank, IOB, Dhanlaxmi Bank, etc. So do keep an eye out on that. But largely, you'd have to say, just about buying time at this 18,500 level. No major positive opening, but just flatlining with a bit of a positive move.
Well, that's right, Sonia. A few stocks that are moving around from the broader markets as well. Gland Pharma, well, there's a report suggests that Fosun could be looking to sell their stake out there, and maybe some big funds are interested. So that one should come up for you on the screen. Godrej Agrovet, well, they had 2 land sale deals that took place. It's a small sum of money, but that stock as well. Let's see whether or not it's reacting. A couple of other notable stocks. GR Infra, well, there was some news out there. They've sold the entire stake. They're getting only around 15 crores out there. KEC International, they won an order worth around 1,350 crores. So that one, in fact, is opened up well in the green as we speak. And Ethos, that stock is one of the underperformers. That's because of, promoters shedding some marginal stake out there. So that one is down close to around 3% as we speak. But the banking names, some of them have done well and they continue to do well. You have Yes Bank, that continues its run. It's up 2.5%. UCO Bank as well is up close to around 2%. And I think Sonia mentioned it earlier, Paytm as well is opened up with a gain of around 2%. So fairly decent opening. The Nifty is unable to sustain that 35-40 point gap up. Could get a bit of a dip. Then, in fact, maybe risk reward could be favorable. Prashant, what else?
I mean, let's take a look at, just the Nifty pack first before we go any further. So, what do we have in terms of large caps? I mean, Tata Motors, I think, got already mentioned. Is tech going to see any reprieve? 2 days of non-stop selling, at least at start, it seems to indicate. So, HCL Tech is up 1%, Tech Mahindra is up 1%, and there is Wipro, which is up about 0.5, 0.6% as well. But too early. Indices Bank is starting higher. Indices did well yesterday as well. So 12.17 on Indices, it's about 1% higher. So it's a slow kind of start in the Nifty. Apollo Hospitals is down about 1% at this point in time. In the broader space, it's gainers in the broader market far exceed losers. We can have Chambal Fertilizer up. Stocks up about 2.5%. It's coming up with very large volumes. Yes Bank is another one which starts 4% higher. Yes Bank was a top volume-led gainer yesterday as well. So Yes Bank at 22 is the number 1 position today. Bandhan Bank is up 3%, 254. It's a completely bombed out name, but seeing some traction which is coming through. Paytm, I think we mentioned at about 540, 541. I spoke about IRFC and these railway names, so there is maybe some follow-through from yesterday. IRFC is up 3% on decent volumes. Nigel mentioned KEC, which is up 6% now. RVNL is another railway name. RVNL is up 4%. FACT, which is up at about 181, is up almost 2% or so. Look at Punjab and Sindh Bank. 80% this month, another 5% today. So make that 85 for the month. So 6% actually, it's moving up. And stocks at about 39 now. That's Punjab and Sindh Bank. Late mover but it's now caught up with what the rest of the pack has done. There is Cochin Shipyard, which is starting about 2.25% higher as well. So, I mean, no dearth of gainers in the broader market space, and I'm just mentioning things with volumes. The list otherwise, of course, is far longer. The Nifty at about 18,534 is up 35, 36 odd points. Futures, of course, still at about 100 odd point premium to spot.
Well, one more stock is Bandhan Bank. You know, they're going to be receiving closer on 917 crores. That announcement just came, I think, at around 847 odd. So Bandhan Bank has opened up with a gain of closer on 3% because they'll be receiving, under a particular scheme, they were due to receive around 917 crores and they've received that. So I guess the street is taking note of that as well, up 3% as we speak.
Okay, well, just one more detail on Tata Motors, right? This is actually the first IPO by the group entity in 18 years. The last time there was an IPO was way back in 2004 from TCS. So, of course, the news, as we know, is that the board of Tata Motors has approved a partial divestment in Tata Technologies. Now, Tata Motors has about 74.4% stake in Tata Technologies as of FY22. And Tata Technologies, as we know, is the product engineering and digital services firm. So, according to the annual report of Tata Motors, the investment in Tata Technologies was about 220 odd crores. And now they'll be going in for an IPO of Tata Technologies. And from the group, I mean, after what, 18 years, there's an IPO coming through. So it's a big thing.
Yeah, no, absolutely. I think the TCS IPO was what, 2004?
2004, yeah.
2004. So, and now you got this one, keenly, widely awaited Tata Technologies. Just a quick word on GHCL. That's the soda ash company. It's down 6.5%. That's a sharp cut, and it's backed by volumes as well. Look at the volumes. For this time of the day, it's pretty decent. So just thought I'll highlight that. A few other names on the downside. Dabur is down about 1%. Lotus Laboratories is down 1.25%. So it's slow, but it's coming up. Dalmia Bharat is down a full 3% now at about 1848. And that's the number 2 volume traded loser that's coming up on my screen at this point in time. All right. More on this in a bit from now, but our market master of the day is with us. Mahesh Patil is Chief Investment Officer at Aditya Birla Sun Life Asset Management Company, and he's joining us to take some questions. Mahesh, great to have you back on the program. Thanks very much. You've been, and correct me if I'm wrong, at the margins, been a little cautious, right? Maybe things have gone up too fast, too soon, and of course, out of whack with what the rest of the globe is doing. How are you feeling with the Bank Nifty at new highs? And of course, I mean, the Nifty almost there practically. What is your sense from here in terms of return potential, absolute return potential?
Yeah, good morning. You're right. I think we have been a bit cautious on the market here, though nothing wrong in terms of the fundamentals. I think the overall outlook on India looks fairly good. We've seen a decent amount of recovery over here. Demand has been fairly strong. And rural economy is also picking up, which is giving legs to the consumption, which was kind of weak last year. And there has been a steady pickup in the investment side also. So all in all, I think the outlook on India looks fairly strong and robust. Earnings growth has also been fairly steady. We haven't seen any major downgrades to earnings after the second quarter numbers. It's been a marginal downgrade. It's been about the valuations and more so the relative valuations where India is vis-a-vis the rest of the world, and especially the emerging markets. And to that extent, I think we've seen that recently there has been some amount of trade where money has moved into China, Korea, Taiwan, which were kind of beaten down and valuations were looking very attractive. So relatively, we've seen some flows there from the FIS side. But I would say the market would probably consolidate over here, I think, until the budget. Now we have the budget in a couple of months. And I think until then, market should remain fairly range bound. As we move to the next calendar year, you will see clearly global slowdown affecting, and that could lead to severe earnings downgrades, at least in the US. And how the global markets react at that point in time will probably drive how we do. But overall, I think we're still very positive on a, say, next 2 to 3 year perspective. We see earnings growth in the region of around 13 to 15% CAGR over the next 3 years. And market should give reasonable returns from here. The risk reward looks fairly well balanced because now interest rates have gone up. So the bonds are also now yielding decent returns. So there is some money which could move into the debt side, especially into the debt funds. And we've seen that in this month also that the equity flows have kind of moderated down. So I think that will probably cap the upside from a very near-term perspective for the market.
Okay, well, Bandhan Bank is another stock that's moving up. We addressed that earlier as well. 3% higher now in Bandhan Bank, and the volumes are picking up there. Bandhan Bank has received some amount, 920 crores under the credit guarantee scheme. So the credit costs for Bandhan Bank are expected to fall because of that, and that stock is up about 3%. We'll talk about that in greater detail as well. Mahesh, this entire space, right? I mean, financials, NBFCs, auto financiers, many of them have done really well up until now, PSU banks. In this entire gamut of financials, which is a space where there is still some valuation headroom and growth room as well?
Yeah, so by and large, we've seen a decent amount of moving all across the financials. The banking stocks have done much better. The PSU banks have actually done even better recently because the valuations there were very, very depressed, and we've seen a very, very benign kind of a credit cost cycle. But I think the NBFCs, some of the NBFCs are now they're still not really done as well because in a rising interest rate environment, we've seen that the banks have actually benefited in terms of NIM expansion, whereas NBFCs have seen some kind of a NIM compression. But as the asset side also kind of rebalances, right, the rates over there, I think we should see the margins on NBFCs starting to improve in the next, probably the first quarter of next fiscal year. So I think some of the NBFCs are now looking at fairly reasonable valuations over there. If you take a slightly medium-term view, especially the asset, I mean the vehicle finance companies over there, and PSUs I think are still offering reasonable value. But again, we think PSU banks would still be a more of a trade. I think structurally the large private banks will continue to gain market share. And even there, I think there are pockets of reasonable value in the private sector banks, right? Some of the large banks haven't really done as well. So I would say overall the space looks fairly valued. There is, I mean, despite the price or performance, we're not seeing the valuations have really reached levels, much significantly above the long-term average across the sector.
Okay. All right, Mahesh, thanks so much for stopping by and filling us in with your views on the index, as well as on a couple of sectors that we discussed. Wishing you a good day ahead. Well, let's move on then. Macrotech developers, they receive a solid response for its QIP, and they've raised close to 3,500 crores at around 1,026 rupees per share. To discuss this, Abhishek Lodha, the MD and CEO of the company, joins us on the show. Hi, Abhishek. Morning. Thanks so much for joining in. Well, first up, you've raised some money. Good response. What do you use this money for?
Morning, Nigel. We were required to get our public free float up to 25%. And the focus of the company and the promoters was to ensure that we achieve this free float in a timely manner. So because the company is very well capitalized and is generating strong internal cash flows, it did not have any need for primary capital. And with our focus on generating high ROEs, raising primary capital would have been dilutive to the ROEs. And therefore, the promoters have done a secondary sale. This is the first QIP done for a secondary sale in the country. And through this QIP, we've raised about 3,550 crores. There being a secondary sale, this would largely be used by the promoters for various objectives.
Okay, and what would those various objectives be? I mean, it's a large chunk, right? Abhishek, hi, good morning. This is Sonia here. What would it be utilized for, say, over the next 12 months?
The promoters intend to use it in a passive manner. The focus of the promoters continues to be 110% on growing the real estate business under MDL. So this will be used largely in passive ways.
So when you say growing the real estate business, I mean, you got really good response for the QIP. So did you guide for any kind of long-term sales growth, any volume growth as well? And what kind of visibility do you have, considering that real estate demand is back in a big way?
Sonia, we've guided earlier, and we continue to maintain that this year we'll, be delivering pre-sales of about 11,500 crores. Over the medium term, we are looking at compounding our top line at around 20% and getting our ROEs close to 20%. So that's really our medium-term forecast, because we believe that the depth of the Indian real estate market, especially in housing, is very, very significant. And we are only at the start of a long-term cycle, upcycle, which we think is a 15-year cycle, and we are only in year 2. So really the compounding of the top line and the growth in margins are both visible. And we believe that, that of course creates significant value for the investors who have invested and shown their trust in our company.
This FY23 guidance of 11,500 crores you're holding on to, because this is something that you spoke about earlier as well. Any indications on what FY24 would look like in terms of pre-sales?
Sorry, like I mentioned, we are guided to 20% compounding in the top line. So, the numbers will fall from there, but we'll issue formal guidance at the end of the current fiscal.
All right, Abhishek, residential demand has been very, very strong. But I want a word on the commercial side of things as well. Do you have more launches that are coming in there? If you could tell us, we've been hearing about some layoffs globally, some part of the commercial markets, maybe it could slow down. Your view on that?
We are very focused on the housing business. That has been a strategic choice the company has made, and almost 90% of our sales come from the housing business.
Yes.
We have a growing business in warehousing and industrial spaces. Our presence in office and retail is modest. We have to take into account global trends when it comes to office occupancy, not only driven by the layoffs, but potentially also driven by things like work from home. But at a more broader level, I believe that India's economy is going to do quite well over the next 10, 15 years. And therefore, office demand in India, as well as retail, or for that matter, any real estate asset class, will do quite well. You could have short-term aberrations due to factor X or factor Y, but the medium and long term is very good for any asset class in the real estate space.
Abhishek, hi, morning. In Loda's portfolio, what is the size of the commercial portfolio?
Morning, Prashant. Like I said, it's very small.
Okay.
We typically, hold. We don't hold too many assets on our books in the office or retail segment.
Okay.
I think our investors, and the quality of the names which have been invested in our company for quite some time now, including GIC, Capital, Nomura, Ivanhoe, Cambridge, and now we've had other strong investors like UBS, 91, which is earlier known as Investec, William Blair, ADIA, etc. come in, and they really understand and appreciate our strategy, which is a housing-focused strategy. They really like the fact that we play across all the price segments within housing, all the way from affordable to luxury. And they like the fact that we have an execution machine which is constantly focused on churning and delivering cash flows rather than holding on to asset. So really, it's a very differentiated business model. And this is what we've been recognized in the last 20 months. A real estate company has raised 10,000 crores from the world's best and most recognized investors in 3 separate instances: our IPO, our primary QIP, and now this secondary QIP. We've done with our capital raises. We have no more capital raises to do because we've achieved our 75% free float. And therefore, given the backdrop of the industry and our strong execution machine and our clear strategy, we hope that we'll be able to deliver significant value to these shareholders who have shown so much trust in us.
There is a big slowdown underway in the UK. So I wanted to understand, is that affecting the business in any way? And what is the status of the repatriation of projects from UK?
Sonia, our UK projects were completed. As we mentioned in our September earnings update, we already paid off the US bond, and there is no more liabilities attached to the Indian balance sheet. We have about 10 billion INR, which is required to be paid, which is required to be repatriated back to India. And that money came back partly last quarter. Some more will come this quarter, and then each quarter over the next 12 months. And so therefore, this 1,000 crores or 10 billion INR should all through come to India in calendar year 2023.
Abhishek, two-part question. One is interest rates have risen a little bit. Hopefully, we're nearing the end of that. At what stage do you think it becomes a bit of a problem with regard to demand? And in the city of Mumbai, where do you expect maximum traction? I'm a little confused as well personally. What's your sense? Which part is looking the best? I look at the rentals sometimes, occupancy that is, and try to derive something, but I'll be keen to hear what you have to say on interest rates and where's the demand the best.
We believe that demand is not very closely linked to interest rates. We'll have to take into account the fact that a mortgage is a 20-year, home loan is a 20-year product, and therefore the starting interest rate makes little difference. Over the 20-year period, rates will go up and rates will go down, and therefore homeowners, if they look at it very, very pragmatically, there's no reason to get swayed by the current interest rate. We believe that home demand is very closely tied to job creation and job confidence, and not really closely linked to mortgage rates or interest rates. We've seen that as rates have risen from 6.5, 6.75% now to 8.3, 8.5%. Demand has actually continued to accelerate because it's really driven by the underlying confidence in the economy. So for anybody who tracks real estate or would like to get a pulse check on real estate, keep a check on the job sentiment. That is the best indicator of whether real estate sales and housing sales are going to grow or not. In terms of demand within Mumbai, I think, as India's commercial capital, with the quantum of infrastructure that is getting completed over the next 12, 18 months, we believe that demand across Mumbai will continue to solidify. We think Mumbai will attract more jobs as investors and companies see the quality of the new infrastructure, which is now being close to completion. And therefore, demand remains resilient and strong across all parts of the city, across different price points. The traction when it comes for 30 lakh homes is strong. The traction for 1, 2, 3 crore homes is strong, and even above that, there is good demand. So quite frankly, Mumbai's supply-demand balance is very much tilted towards having modest supply. The supply is consolidated. Consumers only want to buy from a few very trusted names, and Lodha is at the top of that list. And therefore, sales and demand from the top developers remains quite strong.
I do know that this is your business, so perhaps you'd have to say that, but let's be honest, right? I mean, I've lived in Mumbai for almost 20 years now. With the way the traffic and the pollution situation is carrying out, I think this is one of the worst times to be living in Mumbai. So we can't run away from that fact. But I take your point. I mean, you have a business to run. I have one more question before we let you go. And just reading from your press release, you said that having achieved 25% free float, the company in due course will be eligible for inclusion in various free float linked indices. Just wanted to ask you, when, in terms of a timeline, ballpark, when would you expect the stock to be added in indices like, say, the FTSE and MSCI?
Sonia, Macrotech's already part of the FTSE index, and obviously, given the increased free float, there will be a change in the weightage by FTSE. They do, I think, a quarterly review or something like that. MSCI inclusion, of course, is a much more complex process, but we do expect that, subject to how they operate, we can't predict that, but sometime over the next 12 months is a likely time when we will have inclusion.
Yeah, all right, Abhishek, always good hearing your thoughts. Thanks so much for stopping by. It's been a good year for real estate companies like yours. Let's hope 2023 as well is as strong. Wish you all the best. For the time being, though, we'll slip into a short break. When you come back, we'll connect with Anil Gupta, the CMD at KEI Industries, to discuss demand and business outlook from here on. Later on, we'll also connect with Sanjay Thakkar, the chairman at Landmark Cars. Remember, their IPO opens today.